Traders, education time. January 7th, 2026 opens with the S&P 500 at an all-time high of 6,944. The Dow is at 49,462, Micron is up a massive 10% on the AI chip rally, gold is nearing $4,500, and copper just broke $13,000 a ton for the very first time. But today's key data, the ADP jobs report, and the ISM Services Index, could change everything. In the crypto space, whales are accumulating Link and PENDLE despite some technical weakness. Over the next 10 minutes, we're analyzing these records, the critical macro data, and 10 potential scenarios for the next 12 hours across stocks, metals, and crypto. This is critical. This is 100% educational technical analysis, not investment advice. Always do your own research. Will the S&P continue its run, or is it about to face 2026's first big drop? Comment below and stay for the full breakdown. Let's look at the global macro picture and today's key data. Yesterday's records were stunning. The S&P 500 up 0.62%, the Dow up nearly a full percent, and the Nasdaq up 0.65%. That's 6 consecutive bullish sessions, all led by tech and AI. But today is decisive. The ADP jobs report for December has a consensus of plus 50,000, a huge swing from the previous minus 32,000. The ISM non-manufacturing index is expected at 52.3, just a slight dip from 52.6. Weak prints on these numbers could mean more Fed rate cuts get priced into the market. Right now, futures are showing a natural pause after the rally. The S&P is down slightly, Nasdaq down a bit more, but the Dow is holding steady. Over in Europe, falling yields are reducing financing costs, which is supportive for the global economy. The VIX, our fear gauge, is low at 16.3, but be aware, individual stock volatility is on the rise. Now for the equity records and that AI chip rally. The leadership from AI stocks has been explosive. We saw Micron up 10%, Amazon up 3%, and Palantir also up 3%. The semiconductor sector is already up 20% year to date, and that's after a massive 240% gain in 2025. This shows a deep, structural confidence in AI investment. And copper hitting a record, breaking $13,000 a ton for the first time ever. This is driven by tight supply combined with a strong risk on demand. Following Wall Street's lead, Australia's ASX index rose nearly 0.5%, with mining stocks particularly strong. Oil, on the other hand, is down 2% after tensions with Venezuela moderated. This means energy stocks are flat to down, as the initial spike seems to have been fully priced in. From an institutional positioning perspective, big money is 100% invested, and they're actively buying any dips in tech and financial stocks. Let's switch over to crypto and whale accumulation. Chainlink, or Link, has seen whales increase their holdings by over 57% in the last 30 days. That's about $8.5 million worth of Link. In just the last 24 hours, they added even more. Interestingly, the price has actually dropped 7.5%, consolidating below $12.50. This looks like accumulation on weakness. Then, there's PENDLE. Whales are also buying this one, despite a bearish flag pattern and a 42% drop since November. The smart money index is showing a bullish cross, which suggests informed traders are taking early positions. The price is at $1.81, a critical level to watch. In contrast, for Athena, or ENA, whales are selling. We've seen a 56% drop in its total value locked, and the chart is showing a bearish head and shoulders pattern. It's one to avoid for now. The overall pattern here is that smart money seems to be accumulating DeFi and real-world asset infrastructure plays like Link and PENDLE for a potential first-quarter repricing, not for immediate pumps. Now, for the core of our analysis, 10 educational scenarios for the next 12 hours. Remember, these are not signals. First, in AI chips, we're watching for intraday dips on Micron and Nvidia near their volume-weighted average price, given the plus 10% momentum. Second, for the S&P 500, A post-record pullback of 0.3 to 0.5% below the high would be a natural pause. Third, with the Dow Jones, strong financials could lead to a dip buying opportunity on the first-hour dip after hitting the 49,462 record. Fourth, for copper, we're watching for a continuation of its breakout, with 13,000 as the key support level, thanks to tight supply. Fifth, in oil, a tactical short could be a play, considering the 2% negative momentum as the Venezuela news fades. Sixth, for gold and silver, they could act as a hedge against the ADP and ISM data, hovering around the $4,500 area, supported by falling European yields. Seventh, for Link, the accumulation on weakness below 1250 is a key area to study, given the 57% increase in whale holdings. Eighth, with PENDLE, this is a speculative early entry scenario with a stop at 181, based on the bullish smart money index. Ninth, for Athena, the scenario is to avoid or even look for short opportunities, with 0.17 as support, as whales are selling. And finally, number 10, the ASX 200 in Australia is likely to follow Wall Street's positive open, driven by its strong copper miners. So, to summarize, we have historic records, but the ADP and ISM data today will decide if this rally continues. Gold is near 4,500, copper is above 13,000, and crypto whales are accumulating Link. By studying how macro data, institutional flows, crypto whales, and technical levels connect, you can better understand market dynamics. So which scenario are you studying today before the data drops? Let me know in the comments, from 1 to 10. Like this video if you learned something, and subscribe for our daily 2026 analysis. This is 100% educational. Always do your own research.